And today we want to talk about company reporting season and what we can expect coming up. Paul, the big themes.
Yeah, I mean, company reporting season, of course, is the time when most companies tell us about how they've been going for the last half year and also give us an outlook of what's coming up. So let's talk about some of the major themes, Peter. First of all, we have gone through what's called confession season. Now, this is because of the way continuous
Very
disclosure,
Christian, isn't it?
disclosure works. Companies actually in January, if they know they're really going to do well or badly, actually have to tell us. And actually, it's been pretty positive. Most of the confessions were actually companies saying we actually do a lot better than the market is expecting. So that's been very positive. Now, that leads to the next point. It's really come from the retailers and consumer-facing stocks. I reckon they're going to do really well. These are the Wesfarmers, the JB Hi-Fis, the other companies that have really been able to leverage off all these cashed up consumers, right? And we all know we've been spending because there's nothing else. You can't go travel overseas. And
even going to restaurants has been hard.
Even going to restaurants. So, you know, a lot of the retailers, a lot of the companies involved in sporting goods and in cars, they're all set to have a boom of reports. The big miners, Rio, BHP, Fortescue, have been raking in because of the iron ore price. Look, they really can't do much else for the cash, Peter, apart from give you big dividends, because they're not, fortunately, they've been pretty cautious about what they're spending it on.
Good news.
Get to see some big dividends out of the big miners. On the same tune, Commonwealth Bank and the other financial institutions also start to report. I think we're going to see higher financial dividends from the financial stocks. Really important. I'll come back to the Commonwealth Bank dividend. Now, there's still going to be caution because we know the travel sector and some of the other sectors in the economy are still doing really tough. So they're likely to be cautious. Some further write-downs are possible. I think we probably have some more write-downs of some of the property companies, the REITs. So
because people aren't going back to work as fast as they thought.
People aren't going back to work. One of the other factors to watch out for is the currency headwinds. We've seen a lot stronger Aussie dollar because of the weakness of the US dollars. We've got a lot of companies in our healthcare, industrials and IT sectors that earn most of their revenue out of the US. I think there's some headwinds there, Peter, so I think that could be a negative. And then again, because it's reporting season, although you expect people to focus on the result, markets are always forward-looking and they're really looking more about the guidance and the outlook.
So if there's a collective feeling that companies have done better than expected, the whole market could go up, couldn't it, Paul?
Yeah, so and if we get a bit more positivity from our CEOs, and I think we are starting to see a pretty strong economy, Peter.
Yeah.
I think reporting season could overall be a pretty big positive for our market.
Okay, let's go and look at some of the big name companies that you're watching.
Yeah, these are four I'm really watching and I think could have a really big impact on the market. The first one is Commbank. It's on 9th of February. Now, there are a couple of this is how Commbank reports. You'll expect the other banks to come when they come later in the year. So
there'll be a halo effect. If Commbank does well, all the other banks will do well.
Yeah, so the important things to watch out first was net interest margin. It has been going down. I think they are starting to see some stability. So is the trend on that actually starting to improve or turn around? Revenue growth has been the big issue for banks. Maybe a bit of volume growth coming through. So we might actually start to see some
plenty of loans out there, Paul.
Revenue growth. The dividend will set the tone for the rest of the banking stocks. I think it's going to be on the high side, Peter, 160 cents. But if Commbank board gets all conservative, that'll give a license to the boards of the other major banks to follow suit. So it's really important.
What's the lowest prediction?
Well, there are some lows around about 100 to 120 cents. Okay. So the market's pretty big range on this, but I think it's more like 160. And then the other question is, we know Commbank has so much capital. We are at some stage going to get an off-market buyback. Is it going to be announced now, or is this something that happens perhaps in August in the other second half of the year? So questions about the off-market buyback.
Okay, that's Commbank. CSL next.
CSL is really important because the market's been pretty down on CSL. It is our biggest company. It's got a history of always delivering on guidance, and it's typically surprised. Now, the market's been worried about CSL because of plasma collections in the US being disrupted because of COVID-19, and a lot of reports out about that. Now, CSL has guided to sales growth of between 6 and 10%. That's in what they call constant currency terms, takes out the impact of the stronger Aussie dollar, and profit growth of between 3 to 8%. That's for the full year. So this is a half-year report, but you know, if CSL is in the sort of the top half of the range on either of those two numbers, given what the market has been worried about, it's going to be pretty positive.
it could be an interesting play for the gutsy investor. Let's go to the next one, Paul.
The next one is Telstra, which is on Thursday, the 11th of February. Now, look, Telstra is a pretty down and out stock. This is about confidence. Can it maintain its
It has
dividend?
been trending up lately, Paul.
It has been trending up, and also, what sort of progress is it making in terms of actually getting towards its FY23 EBITDA target of $7.5 to $8.5 billion? It'll be a lot lower for this half. It's more like around about on the 6.5 to 7 range for FY21. But Telstra's a funny company. It's been pretty quiet. We don't get a lot of news about Telstra anymore, and so this is about a confidence story. Other thing, of course, is that they announced back in October at the AGM a corporate restructure. This could lead to potentially spin-offs. We might get an update on that. So expect a bit of good news out of Telstra.
Me too.
Let's just see how it goes. And the final one is Wesfarmers, and this, of course, is the conglomerate, and it's the biggest retailer in Australia. It got rid of Coles, but still has the Bunnings, Officeworks, Target franchises. Had spectacular sales growth for the first 4 months of the year for Bunnings alone. As the lockdowns eased, they were up 30.9% for the first 4 months of the year, particularly as people got out of lockdown in Melbourne. How's that progressed in November, December? What will they tell us about January? We'll get some update there. How's Target going? And of course, for a company that's got out of Coles, it's got out of mining, it's got out of coal mining.
Coles and coal.
It has gone into some new areas. Its only real acquisition has been it bought the Kidman lithium business, which is looking like
lithium's the place to be.
A pretty well-timed acquisition. It is a conglomerate, one of the few in Australia and the biggest. So we might get some news about just how it's trying to steer itself. So again, these companies have largely been on radio silence for some months. So there's some really important news, I think, that these big four companies and the tone that they present could be really important for the overall market.
Yeah, Paul, I think in particular Telstra, there's been a market positivity in recent months. If the CEO comes out and disappoints the market, they'll cop it. But if he confirms their suspicions, it could go for another leg up.
Well, it's a good litmus test also for what's going on in the economy because basically everyone is using Telstra at some stage. They've given a lot of COVID-19 subsidies out, haven't been charging rental and some stuff, and just to see how that's turning around. It's a bit like the banks. But it's also a confidence story because everyone's been down on Telstra. Can they actually find a way to increase earnings?
Live up to their reputation.
I think there could be a couple of surprises here. But, Telstra is going to be big. So these four companies, not just because what they're talking about the overall economy, but also what they mean, I think, particularly for their competitors as well, and are really important stocks to watch out for.
Okay, thanks, Paul.